Hello everyone and welcome back to another episode. It is finally time for us to update these monthly charts. So let's go ahead and get started with the first one. Let's look at my annual dividend income. Right here, this number was what I finished with at the beginning of October, and I had $196.84 in passive income through my dividend stocks. And now for November 1st, 2020, we now have $247.44. There's the updated number right there. Let's move on to the monthly dividend income. Now, usually October is a pretty slow month. Usually March, June, September, and December are usually the biggest month for the stocks that I currently own, but still, it's good to see the updates for what I got. So last month in September, we hit a new high of $16.10, and then for the month of October, we received $12.64 in dividends. Now let's go ahead and go to the third graph, my portfolio value. Now, I did have my $1,000 deposit that I invested at the beginning of October, as well as my weekly $100 deposits every single Monday, which I just also invested in another 100 this Monday as well. But let's go ahead and look at the portfolio value. Last month, we finished with $5,475, and this month, we finished with $6,840. And then last but not least, the one thing that I disclose that hardly any other YouTubers disclose is that I disclose my monthly YouTube income. Last month, we hit a huge, brand new all-time high of $687. This month was not nearly as good, but I am definitely grateful. Even this smaller amount, it's such a help, guys. Being a part-time worker through college, $346.44 is still a massive thing for me. $300 plus makes a huge difference for me in my investing. I thank you guys so much for all that you've done. But overall, guys, the charts are looking really good. This is my monthly updates, and everything is just, it looks awesome. Thank you guys so much for everything that you've done to help, and I really appreciate it. But let's go ahead and jump over to M1 Finance now that we're done looking at those charts, and let's go ahead and look at the activity feed for the month of October before we go through all 26 of the stocks that I own. And by the way, if you haven't seen it before, if you're new to the channel, these are the 26 companies that I own. But I deposited $100 every single Monday for the month of October. And if we go to my trading here, my trading, you can see that I bought multiple stocks. I bought all these different stocks in my portfolio. I did raise two stocks up 1%. I raised Home Depot and Procter & Gamble about midway through the month. And then I also had a sell. I finally sold out one of my companies, and then I increased my position in WP Carey. Those of you that haven't seen it yet, I did finally sell out of my position at AT&T. Go ahead and watch that video down below if you haven't seen that already. But I sold out of AT&T, and I decided to increase my position again in WP Carey. WP Carey is a very solid stock, and I think it's really undervalued right now. But just like throughout all the month, I'm buying all of these companies that I own, and then I even bought some more stocks last week. But overall, guys, if you look at my dividends, everything is going great, continually getting those dividend payments up. Nearly every single payment now I have is $1 or up. And considering if we take off the dates here, if we just go to dividends only, if we go back to when I first started, let's go to some of my first dividend payments. A lot of my dividend payments you see here, 48 cents, 50 cents, 60 cents, 30, 10 cents, 40 cents, 30 cents. And if we go to today, we go to the most recent chart here, you see $1, $3, $1, $4, $2. A lot of these dollar amounts are starting to gradually get higher and higher. And I wanted to show this here. I try to give this update every single month because this is the only company that I own that pays me out monthly, every single 30 days. And you see, when I started, it gave me 60 cents, 70 cents, 71, 83, 95, $1.42. And then I think this month's payment is supposed to be around $1.90, $1.95. So every month this is increasing, and Realty Income is a perfect way to see that. And all these stocks are pretty much going up in dividend payments and share price value pretty much every single month over the long run. But thank you guys so much for tuning in. And if you want to support the channel, how I help fund this YouTube channel is signing up with this referral link that is in the description. You get $10 for using M1 Finance. This is the brokerage that I currently use, no fees whatsoever. You get $10 when you sign up and deposit $100 to the platform. We have 52 people signed up, and if you want to see the investing portfolio that I use, this link will be down in the description. So if you want to check out the description, there's lots of other things as well, like mentoring calls, Yada savings accounts, credit card referrals, M1 Finance signups, all that jazz. But let's go ahead and go into the 26 stocks that I own. They're all right here listed right here. And then if we go ahead and start with my number one investment, which is 8% of my portfolio, I'm up 80 bucks or about 36% on it. Broadcom is an excellent technology stock that has the great opportunity for share price gains and dividend increases. One of the fastest growing dividends in the stock market, from 44 cents all the way up to $3.25. If you're wanting to invest in Broadcom now, when I started talking about Broadcom and when I first started buying it, it was under $200 a share. When I first started mentioning Broadcom and when I wanted to start investing in it, it was around $200 a share. Today it sits at $350, so at a much higher price, but even at these levels, I still think it is a great buy. You're still picking up a 3.5% dividend yield, and they due for another dividend raise in about a month or two, and they have a history of raising their dividend quite substantially, so I think this has an excellent opportunity, still growing revenues at around 6 to 8% a year, so pretty good growth, and I think this share price has great opportunity. Very safe, very stable technology stock. My second largest holding is Realty Income, the one we just showed with my dividends. Currently up about 25 bucks or about 12% on it. And Realty Income is just one of the best real estate investment trusts out there. Now, I did just invest a lot into real estate this past month, like I have the past 2 or 3 months. And Realty Income is one of my largest investments because they have a great dividend yield, diversified between 6,000 plus properties, great tenants, great occupancy rates, and overall, they're just the best well-run real estate investment trust in the stock market. And one of the best things about this is that you will be getting a minimum of 4 dividend raises a year, and instead of getting paid out dividends every 90 days, you get paid out every 30 days. They just reported earnings, and they can still easily maintain that dividend, so looking very good for Realty Income. One of the only utility stocks that I own is a Southern Company, up about 50 bucks or about 25% on it. Like I've said in the past, is that people traditionally pay their electricity bill. Usually that's going to be one of the first things that people decide to pay. They get food, they get shelter, they pay their electricity, things like that. People do this before they go out and buy the new iPhone, before they go out and buy a new car, things like that. And basically, when you think about Southern Company, it's just one of the most safe, stable, government regulated stocks out there, giving you over a 4% yield just to own it. And just the other day, this was actually yielding over 5%. So this is an excellent opportunity to buy the stock, considering that it was selling for over $70 a share last year. Well, now it's trading at under 60. So still an excellent buy there, and I love this company. Next up, we have my fourth largest company in my portfolio, the other real estate investment trust I've been talking about a ton. Pretty much the same thing like Realty Income, very diversified, very safe, very stable. This company yields over 6.5%, raises every single quarter. WP Carey is the stock that I am very bullish on right now. I think that this is the most undervalued stock in my portfolio, and I think that it has a long way to run from these share prices as well as that excellent dividend yield. So WP Carey is a great buy there. And let's go ahead and go to my next investment. And this is one of the few stocks that I have in my portfolio that I don't really focus so much on the dividends, where I really like to focus on the growth. Visa is a growth stock that I'm very bullish on, especially after this recent downturn, going from about $205 a share all the way down to about $180. Visa is currently, in my opinion, trading at a sale because they're still growing revenues in the double digits. It's not very often you get to say a company that is $350 billion is still growing in the double digits. Visa has a long way to run with their mobile platforms and their just basic credit and debit cards, and I just love the business model with the incredible margins, that safe dividend yield, which is growing quite substantially, and they just raised that dividend roughly 7% last week. So this stock has a long way to go, and this is a stock that I think I'll probably be owning till the day that I die. JP Morgan Chase. JP Morgan Chase is the best bank out there in my opinion. I'm sure you guys all know and love JP Morgan. And JP Morgan, in my opinion, is trading at an excellent price. You know, you look at JP Morgan, and I started buying this, I believe it was around $90 a share, maybe a little bit under. And today, even at 104, it is still a steal. I think that if tomorrow the stock went to $120 a share, it is still at a pretty good price. And there's not really many bad prices to buy JP Morgan at. They just announced their big competition that they'll be launching against Square to compete against those mobile fintech companies. And I think that this is great. I love their CEO, James Dimon. And I think that of all the big banks out there, comparing JP Morgan Chase to a Wells Fargo, a Citibank, a Goldman Sachs, anything like that, I think that JP Morgan is the most revolutionary. I think that they typically can adapt their business model to the environment a lot quicker than a lot of these other big banks can because they overall just pay attention better to the market and have more innovative products. But JP Morgan, best bank out there in my opinion, and that's why it's a heavy position in my portfolio. And 5% of my portfolio also goes to 3M, one of the only industrial companies that I own, currently yielding about 3.6%. 3M is a stock that has been hit very hard ever since back in 2017, trading at about $250 a share. Today it trades at $166. Now this company has slowed revenues recently in the last year or two, and the Rona has hit this company very hard. But you're looking at a company that has raised its dividend every year for over half of a century. That's right, half of a century. They raised it pretty small here in 2020. They're due for another dividend raise at the beginning of 2021. I don't expect it to be very big, but any dividend raise at all, I'll be very happy with because this company pays out an incredible yield, has incredible opportunity for share price growth, and the compounded annual growth rate for this company over the past couple of decades has been incredible. And I think between its 50 plus thousand products, I think that 3M is going to continue to thrive in the long run. Pepsi and Coca-Cola, these are two of my largest holdings, and I do like Pepsi a little bit better than Coca-Cola because of the brand of products that they have. They have a wide array of different products, and they're constantly reinvesting in their business. I don't really want to go over Pepsi and Coca-Cola too much because I did just make a couple of videos about them showing how they're going to grow revenues from their new products that they're making. Coca-Cola is about to come out with Coca-Cola Coffee. They're about to come out with alcoholic beverages, and then PepsiCo is having new brands with things like Soda Streams and things like that. And these companies basically are just such large beverage and snack food giants that if you believe that people are ever going to need something to eat or need something to drink in the future, then pretty much you can believe that Pepsi is going to be around for the long run, as well as Coca-Cola. Now, one of my favorite stocks in this portfolio, I wouldn't even mind bumping this position up even more. Johnson & Johnson is the best healthcare company out there. Johnson & Johnson is basically like a healthcare ETF because they own everything from $100,000 surgical equipment to basic over-the-counter drugs to Band-Aids, Tylenol, Listerine, just a lot of basic products that you don't think about that you probably use all the time. Johnson & Johnson is currently working on the vaccine for the pandemic, but that is not the reason why I'm buying this company. I don't even think that should really be a catalyst to buy it. I don't even think that it'll probably be even very profitable for the company, but I think that this company, with raising its dividend roughly 6, 7, 8% every single year, as well as a pretty good growing share price, over 20% of the company's revenues have came from products that have been launched within the last decade. So they are constantly buying out smaller companies, constantly inventing new products, patenting new products, and this company finds a way to continue to grow revenues every single year. Johnson & Johnson, one of my favorite stocks in this portfolio, and you're looking at one of the only two companies on earth that has a AAA credit rating. So Johnson & Johnson, very good, very safe, and it is, in my opinion, one of my favorite stocks. Caterpillar is currently 4% of my portfolio. It has had a big run up. It is not nearly as good as a valuation as what I was really loading up on this company as. When this company was at 110, 120, I was really loading up on it a lot. Today it trades at 166. Just the other day it was about 170. And this company has not raised dividends in 2020 due to the pandemic. But even without that raise in 2020, they will be raising it in 2021. And they are very financially stable. And they bounce back quite heavily from this recession. One of the reasons, too, and just another bonus why I really like this company, I mentioned this before, they have an opportunity for an infrastructure bill. There's been a lot of rumors recently in the last year or two with the government passing an infrastructure bill that would be in the trillions or hundreds of billions of dollars. And guess who would be the biggest benefit of that? You're looking at it, Caterpillar. Caterpillar still offering a 2.5% yield even with this huge run up and the opportunity for that infrastructure bill, whether it happens or not, they're going to thrive, raise those dividends, and Caterpillar is a great heavy machinery stock. Procter & Gamble, one of the best defensive companies out there. A lot of older retired people own this. The dividend yield is not anything to shout about with this recent share price going up. But basically, when I buy this stock, one of the main reasons why I like owning the stock, when I don't have any bonds in my portfolio, is that it is very, 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 very defensive. Its beta for the stock is extremely low. It does not move very quickly. It is a very gradual, slow trend upwards. And recently, this past year or so, it's done quite well. It's went from about 118 a year ago from the time I'm filming this, now up to 142, and that's even with the recent downturn. This stock was $145 the other day, and when I really started buying the stock heavily, when I started buying it at the beginning of April, I was originally buying the stock for about $110, $120 a share, and Procter & Gamble is a company that I would buy for pretty much any price, from their defensive nature and their wide array of products. Procter & Gamble, a great safe company for pretty much anyone to own. McDonald's, I'm sure you all know McDonald's. It's one of Warren Buffett's favorite. It's one of many consumers' favorite. I love McDonald's. They have the best French fries out there. By the way, if you want a cheap deal, go ahead and download the McDonald's app. You can get crazy deals off their food there. Like usually I get a McDouble, a large French fries, and a Dr. Pepper for like $3. It's crazy. But McDonald's, you all know the company. They're very safe, very stable. And one of the reasons why I love this company, like I mentioned recently, if you haven't seen The Founder yet, on Netflix, I think you should really go watch that because I think it gives you a perfect idea of why this company makes so much money. It's not so much off of the food and beverages that they sell. It's mostly off of the real estate properties that they sell to their franchisees. When you want to franchise a restaurant from McDonald's, you buy the restaurant from McDonald's. McDonald's owns the land and the property that's on it, and then they receive rents every single month from you, the franchisee. And that's how McDonald's has been able to keep up its revenues even throughout recessions. McDonald's very safe, a very good dividend yield, excellent growth. When I started buying this company back in April, when I started this portfolio, I was buying it at about $160 a share. And I've bought it even today all the way up to $200. If this stock went up to $250 tomorrow, guess who's still buying it like crazy? You're looking at him. That's me. I'm going to buy the stock pretty much no matter what. A company that has performed very, very well. A company that is probably my best performer in the portfolio. I think it is the actual best performer in my portfolio. When I first started buying the stock, I actually bought it for $29 a share. Back in April, I saw this company and it was at rock bottom prices. It started to come back to reasonable valuations now, but considering even at these prices, you're still getting almost a 3% yield, which will grow most years when we're in a regular economic environment. But this company has been hit way too hard from the recession. And a lot of these loans are a lot safer than what a lot of other people had suspected. But basically, this company has recovered in a massive way. And I think they'll get right back eventually in the long run, back to those all-time highs of 80 and 90 bucks a share. But I am still holding on to this company. It's not nearly at the valuation what it used to be. I'm not looking at selling out of this company, but we've had some great gains from this company. Over $90 worth of gain, 140.02% return on a time-weighted return, and Discover Financial has overall just treated us very nicely. And remember, that 140% return has been on me raising my cost basis. Like I said, it's $69 a share today. I started buying at $29, so that's well over a double up, and I think that this company is just going to continue to do good. Store Capital is one of my favorite. Like I said, I'm pretty much bullish on all REITs. I won't go over this too much, but 5% yield, Store Capital, there's many bullish reasons why I love it, but I think all of my real estate stocks are pretty undervalued right now, and Store Capital is no exception. I think that this company just raised its dividend just the other day and still gives it over a 5% yield. A lot of these real estate stocks are undervalued, so go ahead and give W.P. Carey, Realty Income, and Store Capital a look. Now, the highest yielding stock in my portfolio, one of the only really risky high yielders in my portfolio, with over a 9% yield, nearly a 10% yield, is Altria. I think Altria definitely has had some pain hit it recently with the Juul stake that they had a couple of years ago. But when you look at this company and realize that they're offering over a 9% dividend yield, 9%, which in my opinion is relatively safe. It definitely has some risk there, but I think they'll be able to maintain it. If they're able to maintain it, you're already locking in a 9+% gain, and I think that share price could easily get back to $50, $60 a share. There's not a lot of upside potential, but I think a lot of the negative impacts of this company has already been priced in. So in the meantime, I'm getting those excellent dividend payments. A stock that I did just beef up, like I mentioned, Home Depot. I should have beefed this company up in my portfolio a lot sooner, but this stock basically has been growing its dividend for about 10% plus every single year for the last several years. Now, usually a company like this gets hit very hard in a recession, and it did for the past 30 days during the beginning of the recession, but it has bounced back in a major way. The shutdown has made people upgrade their homes like never seen before. The CEO of Home Depot, when this pandemic first hit, was saying that this is the type of business that has hit all-time highs for them. They've never seen any type of sales growth like this before. Now, I am hoping that that share price comes back down to earth. I'm hoping it gets under 250. I hope it gets closer back to 200. Probably won't, but if it does, I'll be buying the stock heavy. And even though it has a 2% dividend yield, they're looking at raising that dividend probably over 10% in the next couple of months. So I expect this will probably be closer to 2.5% dividend yield on a yield on cost basis, but this stock is very safe, very stable, very competitive to a company like that of Lowe's, and I'm considering even added Lowe's to the portfolio as well, but great stock there. And then Waste Management is a company that I own, and one of the reasons why I love them is that they're one of the most defensive business models out there. Basically, like I've always said, if people are going to create trash, Waste Management is going to be there to clean it up. Waste Management is currently trading at 114. I did lower in the portfolio a little bit because right now it's not offering as good as the dividend yield or price like a lot of these other companies are. But Waste Management is still growing its dividend quite heavily. They're due for another dividend raise, I believe, in the next couple of months. And Waste Management, like I said, pretty much no matter what happens with the pandemic, no matter what happens with any recessions, Waste Management is probably going to be doing just fine. So Waste Management, if there's any downturn in the price, I'd love to buy more in it. Next, Energy Partners. The only real energy stock that I own, it's a renewable energy company, still offering a 3.5% dividend yield raising that dividend every single quarter. NextEra Energy Partners is a subsidiary of NextEra Energy, and they just offer a better dividend yield. And I really like this company, and I think that the share price and dividend gains will be massive over the next coming years. And then we go down further, and we're getting towards the end of the list, and let's go ahead and go to the last couple companies. Let's look at Cisco. Cisco is a company that has performed quite nicely when I first bought this company. When I first started buying it, it was about $40 a share. Today, even after the little downturn, it's currently trading at about 60, so about a 50% upside. And this company has continued to raise dividends even throughout the pandemic. They're looking at raising it again in the next month or two. And I think that with a 3% yielding stock for a very safe company like Cisco, this company has hit the share price way too hard, and this gives you an excellent buying opportunity. Like I said, this company was trading at about $85 a share before the pandemic. Today, even with the recent upwards movement, still trading at 60. So a huge downturn there, and you can still pick this share price up for a steal. Next up, we have Honeywell. Just raised their dividend as well, just last month or so. And Honeywell is a stock that I think is still growing quite nicely for an industrial company. Been raising that dividend most years, about 10% plus. They didn't raise it quite as much this year. They only raised it about 4%. But Honeywell, I think, can have a long way to run with its share price as well as that growing dividend. They're growing revenues at a quite substantial rate considering that they're an industrial company. So look into Honeywell and check it out. I think it's a pretty interesting play for a dividend growth play. One of the only other utility stocks that I own is Duke Energy, very similar to that of the Southern Company, pretty much same thing. People are always going to pay their electricity bill pretty much no matter what. And one of the cool parts about Duke Energy is that NextEra Energy is potentially looking at buying them out. That's part of the recent upwards movement in the share price, and I think that there's potential for that to happen. And if that happens, then hey, I'll get some good share price appreciation out of it. Qualcomm is the big 5G stock that I've been buying. 5G has a huge opportunity, and that's the reason why the stock has moved up in a massive way. When I started buying the stock, it was about $65 a share. Today, it's double that price, as well as raising the dividend quite a substantial amount from 62 up to 65 cents. And I think that this company, over the next couple of years, when the 5G wave gets rolling, as well as Broadcom, Qualcomm will have some massive gains. I wouldn't be surprised if in the next 2 years we see this company break $200 a share. I'd like to go on record and say that by the end of 2023, I assume that this company will be at least $200 a share. I'll go ahead and say it. But let's go ahead and go to the next company. The last two companies that we have, the next one is Verizon. This stock is almost exactly from where I originally started buying it. Basically, when I look at this company, very similar to an AT&T, but without the bad management, with a lower dividend yield. Verizon gets a massive amount of cash flow from their telecommunications business, and the fact that it hasn't really went anywhere from this recession pretty much shows you how they're pretty much not growing at all. They just grow at about a 1, 2, 3% rate, and they have a hefty payout ratio. But the fact is, I think they'll be able to maintain that payout and raise it gradually over time. And if that's the case, I'm getting a 4+% dividend yield. And I think eventually, talk about the next 5, 10 years, their share price will eventually gradually trend up. So this is why it only makes up a small percentage of my portfolio, but Verizon, a very safe, very hefty dividend yield there. Starbucks is one of the biggest growth opportunities I have in my portfolio. Definitely a consumer-based company selling traditional coffee products. And Starbucks just has a great business model, and the type of consumer demand that this company has reminds me like that of Apple. When people go to buy a new cell phone that currently have an iPhone, they don't say, okay, should I get an Apple or should I get an Android? They say, what type of iPhone should I get? When we go to get Starbucks, like my girlfriend loves Starbucks, just like every other person out there. When they go to get coffee, they don't say, should we get McDonald's coffee? Should we get Dunkin' Donuts? Should we get Starbucks? They say, what type of coffee from Starbucks should I get? It's already naturally implanted there that they're going to get Starbucks, and they have excellent branding power, great margins on their business, and they own over 90% of their stores outright, the corporation does. So Starbucks, I think, has excellent opportunities there, and they are going to continue to raise those dividends and share price massively. And they just raised the dividend almost a whopping 10% here again in 2020. So I'm very heavily invested in the stock for the future, and who knows, maybe I'll even consider bumping this investment up even a little bit more. But Starbucks, a great investment there. But that makes up the 26 stocks that I own. Like I said, if you want to see this pie, it is down in the description. Thank you for watching all the way to the end. If you want to see these updated next month, I would like you to invite you to subscribe. These are updated every single month, and you can see the progress that I'm making every single week through these buys that I'm doing every single Monday. And we have 52 people sign up with M1 Finance. Go ahead and be the 53rd person that downloads the referral link, deposits $100 to the platform, and gets a free $10 just for doing so. But thank you guys so much for watching, and I'll see you guys next time.